So the FX one is even simpler than the crypto one. It's a combination of 5 indicators, which is the VRVP, which is something that we are using everywhere. The fair value gap, the liquidity pools, the ICT concepts for the breakouts and the all the other stuff. And the pivot points yearly. So this is the Fibonacci pivot points on the yearly charts. These are printed every year at the start, and we have obviously this all these ones. And yeah, they don't have like specific importance, uh, level of importance, but yeah, and we are going back only two pivots, meaning this year and last year. So what we essentially we are waiting for, let me just change this as well. So what one thing we did change was the market structure shift and breakout structure length, and we don't need all these things. Uh, yeah, liquidity we can show FBG. FBG we don't need to show because we have different indicators, and these all these other things we don't really need. So that's pretty much about it on these indicators, and you can follow the price until it comes close to one of our levels. So obviously, along with these levels, the volume is one of the main ones that create own levels, each own level. So we have to mark those as well. Let's say if we go back to the current year, start of the year, our point of control being here once uh, that's our point of control. We have to mark the volume, major volume levels as well. So this one again, this is key volume level, and again here. But as a whole, we can mark this zone as well. If we can mark it, uh, we essentially have a lot of volume here. So we can assume these levels does not essentially work as resistances until it breaks down, obviously. So the low points, so the lower parts, uh, until it breaks down, that will work as a support, or until it breaks out, that might work as a resistance. Obviously, it broke out as you can see, but yeah, at that point, before we know what is going to happen, that is how we treat it. Now, execution again is 4 hours, so no lower time frame. So you just wait for the price to come back to our level. And let's say in this situation, what is happening? Let's see. So we can expect the price to be for having some support on the sell side liquidity here. We are not seeing any momentum, no FVG is being created, no change of structure, anything, nothing. So we essentially wait, and because we are close to such an important level, we wait again. So that's our FVG created. This is created, and we plan our trade when it is created. At this point, at this point, we are starting to plan our trade. What is our trade? Our trade is entering here, targeting this, stop below the breakout candle. So that's our breakout candle, but since it's jumping ahead, we're going to keep it lower than the first candle, and that's our trade. Let's see it get executed. So it goes above, comes back, triggers the entry. Obviously has a lot of volatility inside, but at the end of the day, it hits the target within 4 days. So Monday, June 23rd triggered, Friday it is closed. So 1 week it stays. A lot of volatility is inside, and it's closed. So this is the DAX trade we're talking about. But if we go to something else, maybe maybe euro as well, we'll see. We'll uh, a lot of good price action there. a lot of volatility, more volatility as well. So FX are generally more volatile than the indices or other commodities. The commodities and indices find it hard to find the find the trend. But once they do, they are just essentially much less volatile than the FX pairs. So in FX, essentially, we are watching the trend lines as well. So as you can see, this is multiple confirmation trend lines along with different kind of all the other things that we had uh, from the previous style as well. So everything is kind of marked here already, and what we are in essentially can be said as a major bullish trend. So in that case, finding the right confirmation might be difficult, and getting the right entry might be difficult as well. But even in these cases, if we go back and see what is happening from these trend lines and from these key VRVP areas. Let's say this our VRVP area is marked, right? So let's see what is happening when we go back to a certain bar. So let's say here we are going back and we are watching the price action on a much smaller node. So this was the point of control we had, that obviously acts as a resistance. The lower time frame point of control also being there. We are waiting for a price to retest this FVG that is created after the market structure shifts from the first confirmation of the trend line. We can possibly plan a trade around these levels and target the point of control and put the stop below these levels, but we see their key yearly pivot there as well. So we wait and we wait for the right confirmation. We let the price test the key uh, signal, that is our trend line, and at that point when we get the sharp reaction from that trend line, we can execute the trade, or we can wait uh, for further retest, etc., etc. But yeah, it's possible that we can take this trade and yeah, make something out of it. But again, essentially, we are getting the resistance at the point of control that we drew, and the price is pulling back to give us further entries if we want, and we can put our stop loss there and target the higher area and the higher areas. So we can essentially start carry our trade and keep pushing up based on this trend line. Again, this is giving us another confirmation. So the same trade might continue. Some people who trade in that manner might continue the same trade, but for us, this first one can be a separate trade. That second confirmation and the push up to the yearly pivot can be a second trade. And then again, when the retest happens at the trend line, that can be a third trade, which pushes up, and that is continuing for till now. So that's how we can trade. Someone might just carry this trade till here. So that's how different approaches and different kind of um, uh, asset can dictate these things. Again, with some things like coffee or maybe sugar, or let's say platinum, because we talked about uh, platinum. So platinum, I think, is better long term, better daily. So if you look at those levels, this was the only volume level that there was, and the price stayed there, I think, for two, maybe a very narrow range for almost a year or so, almost a year or so at the very narrow range, and the whole year of the 2024 and before stayed in that narrow range. But yeah, it has broken. But we discussed this earlier as the 950 level being a key level to enter and follow up for a longer term trade, but that's something that is evident here as well. So from our point of view, it becomes bullish, kind of bullish when it is going above the P line. So let's say it's going above the P line. So this is the third kind of entry. So the AVGs we talked about in the earlier trades. This is the other kind of entries on market structure shifts. So we're seeing the price take liquidity from there, but this is no entry. This is we cannot enter here. We have to wait for the certain momentum and certain signal that may trigger in a scenario that can give us enough confidence to enter. So that's happening above the P line. So above the P line, we're getting a market structure shift here. We can plan a possible trade here at the entries of again, the market structure shift is coming with FBG. So the next line being 139, 10339, and the stop being around 946, 947 with entries around 975, 980. So that's pretty much our trade, 2:1. And if we let it trigger, so let's say we let it trigger and play out. It's playing out for a long time. So this is because this is daily chart. It's taking some time before getting, so it's triggering around, let's say, April, but we are getting the momentum only. So late in April, we are getting the entry, and late in May, maybe third week of May, we are getting the momentum. When this triggers, we can move our SL to maybe below this breakout candle, potentially locking in gains and targeting the next level. And when that happens, when that level is triggered, we can potentially again do the same and keep doing the same, keeping the gains locked. But now that it is much at a higher place, that we don't really have somewhere to go at the moment. We have not seen prices this high since the 2021 high, and there is potential that the prices can break down. I think targeting 1300 and then closing would be a better idea. So that's how we can manage long-term trades as well. Even with fees and all, this rewards everything that is there. Also, on the daily charts, it is wise to do CHF pairs. So because CHF is slow, it takes time to play out and make its move. The daily time frame can be useful there. But other than that, most of the assets on the FX side, especially the yen pairs and all, and the majors, they can be traded on the 4 hour. So that's the approach. We are entering from these levels on three main modules. So if we go to yen as well, so the three main modules are the confirmation, the breakouts, the market structure shift, or what happened is for some reason it's not printing the MSSN breakout structures. Yeah, so now it's printing. So yeah, that's about it. When we are seeing these kind of movements from key levels, breakout structures, again breakout structure from key areas. That is the point to note here. It has to be an area that we know it's good, and based on the yearly pivots. So those areas getting the breakout structure, market structure shifts, those are the great entries. FVG confirmations, those are the great entries that we have to take. That's about it.